Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Wednesday, March 20th, 2013. Well, a continuation of the trend to the upside today. A candle that's made a lower high and a higher low, so the previous trend remains in force, and that was an uptrend, so the market remains in that uptrending phase in the first time frame. In bar chart terms, this is an inside day. They tend to be candles of indecision and indecisive because the buyers weren't strong enough to take out the previous high and continue that series of higher highs and higher lows, so there is some doubt about the continuation of the trend to the upside. Just looking at this candle, we have a black body, and that could be important. It's been some time since we've seen a black body in this market. It represents the sellers making net bearish progress on the day between the open and the close, and represents a change in sentiment in the market where the buyers were making net bullish progress for the previous 4 consecutive days, so potential for a change of trend based on that. Having said that, however, the sellers have failed to take control of this market. With the market closing just above the midpoint level, it does represent that the buyers have control, very, very weak control, and generally neither side has any decent control of this market at the moment, and that's in stark contrast to the previous candle where the buyers had very strong control, so it does suggest potential for a change of trend. Now, we also saw strong upside price rejection from the 1600 round number level, and for the second consecutive day that's held as support, previously resistance in the recent past, so we've seen how that has changed character, and it will be a strong barrier if this market is going to change trend. Potential Japanese candlestick reversal patterns here. This is a potential hanging man pattern, not perfect because we have this little shadow on the top, but it does represent a potential for a change of trend and a hanging man type pattern, and almost a tweezers top pattern as well, where these two highs are very much in the same area, not quite perfect though, but the ramifications are the same, and it does suggest potential for a change of trend. And what we're looking for is confirmation of that change of trend to the downside. We want a lower high and a lower low, but obviously 1600 will be a strong barrier to that happening. Now, in terms of the Fibonacci extension, we're examining the first time frame uptrend and its relationship to the previous time the market was trending up. And here today, for the second consecutive period, we've seen the market rejected from the 100% level, and that does suggest that there is potential for a change of trend. And also with the Fibonacci retracement technique, we're in an expansive mode of that, tested to the 100%. To the 161.8% level for the second consecutive day, suggesting a possibility of a change of trend to the downside. Now, as I've already mentioned, the one factor against this potential change of trend is the solid support at the round number 1600, and then just below there we have very solid support at the Tenkan Sen, so good decent support down below. Not a lot of resistance until the market tests up to around the 1620 level. That is fairly close, so the market could test higher and be rejected from there, and then resistance up around the 1625 area. Now, in terms of Ichimoku, a bearish market in the long-term time frame, we're trading below the cloud, and the market has turned bullish in the medium and fast-term time frames by trading above the Kijun Sen and the Tenkan Sen. We saw the market break out above the Tenkan Sen a few weeks ago for a decent change in sentiment, and then the market retraced back down to the Tenkan Sen and rallied away from there, suggesting confirming that change in sentiment that we saw. And now today we've seen the second close above the Kijun Sen, and that does suggest that there is likely a change of sentiment, and that change of sentiment has been towards the buyers in both the medium and the fast-term time frame. So potential for this trend to continue up. So we do need to watch the high of the current candle for a potential higher high and higher low, but honestly, the 1600 round number resistance is quite strong, close by. The market has been rejected from those areas for 2 consecutive days. This market could go either way. We should be looking for a breakout to the upside or a possible breakout to the downside below the 1600 level.